The power of algorithmic trading lies in turning ideas into fully automated systems. And that's exactly what expert advisors do. They take the strategies you design, convert them into rules, and execute them in real time, trade after trade, without hesitation. This transformation requires more than just code. A complete EA integrates market indicators, trading logic, risk controls, and rigorous backtesting. It starts with defining entry and exit rules, builds in stop losses and position sizing, and ensures every action can be tested before it's deployed live. By weaving all these parts together, expert advisors don't just follow your strategy, they enforce it with consistency and precision, giving you a system that runs 24/7 while you focus on the bigger picture. Behind every EA is code, and for MetaTrader, that means MQL4 or MQL5. These two languages share the same purpose, turning your logic into executable trading systems, but they differ in complexity and capability. MQL4, built for MTOR, is straightforward. Its syntax is simple enough for beginners, making it the natural entry point for new developers. The language uses an event-driven model where functions respond to market ticks, trade confirmations, or chart updates. With built-in trading functions and access to a large library of indicators, MQL4 allows you to script effective EAs without needing advanced programming experience. MQL5, created for MT5, raises the bar. It introduces object-oriented programming, which lets you build modular, scalable code, ideal for more complex strategies. It also comes with advanced debugging tools and supports multi-threaded execution, meaning calculations and backtests run faster and more efficiently. Combined with enhanced market analysis functions, MQL5 opens the door to professional-grade trading systems. In both cases, the core idea is the same. Translate your rules into code so the platform can monitor markets, evaluate conditions, and place trades automatically. Mastering these languages is what transforms traders into system designers. Every expert advisor is built on a three-part architecture that keeps the system organized, flexible, and reliable. First are the input parameters. These are settings the trader can adjust without touching the code, like lot size, stop loss levels, or indicator periods. Inputs make your EA adaptable, so the same code can be reused with different strategies or market conditions. Next comes the market analysis logic. This is the brain of the EA. Here, it processes incoming price data, applies technical indicators, and checks conditions to see if a trade should be placed. Whether it's a moving average crossover, RSI threshold, or breakout detection, this is where the strategy itself lives. Finally, there's trade execution. Once conditions are met, the EA automatically places orders, manages open positions, and enforces risk controls, like stop losses and take profits. This part ensures consistent application of your rules in live market. Together, this three-tier structure creates a system that can adapt to various markets and timeframes while ensuring trades are executed exactly as intended. It's the framework every effective EA is built upon. Most EAs don't run on raw price data alone. They rely on indicators to define rules with clarity. Three of the most widely used tools form the backbone of automated strategies: moving averages, SMA and EMA, smooth price action, helping identify trends and generate buy or sell signals. Crossovers between different periods, like a fast MA moving above a slow one, are easy to code and provide clear entry points. They also help define support, resistance, and momentum shifts. The Relative Strength Index, RSI, measures price momentum by tracking the velocity of gains and losses. Values above 70 suggest overbought conditions where prices may reverse, while values below 30 point to oversold markets. RSI also detects divergences, when price makes new highs but RSI doesn't, which often signals trend weakness. The MACD, moving average convergence divergence, blends both trend following and momentum elements. It uses signal line crossovers and histogram analysis to confirm trends or spot reversals. Because it incorporates multiple data points, it provides a more nuanced view than a single moving average. Pro developers often combine these indicators to filter out false signals and increase accuracy. The goal isn't to stack more tools. It's to select indicators that complement each other without duplicating signals. To see how this works in practice, let's walk through the moving average cross strategy, one of the simplest and most effective EA setups. Step 1 is calculation. The EA continuously measures a 10-period fast-moving average and a 20-period slow-moving average on each new price tick or candle. Step 2 is detection. The EA checks for crossover signals. A bullish crossover happens when the fast MA crosses above the slow MA, signaling a potential buy. A bearish crossover occurs when the fast MA moves below the slow one, indicating a sell. Step 3 is validation. Before executing, the EA confirms that account balance, open positions, and risk parameters are aligned. This prevents overexposure or trades that violate your risk rules. Finally comes execution. The EA places buy or sell orders automatically, complete with stop loss and take profit levels. These ensure that risk is controlled and profits are secured without manual intervention. This flow, calculate, detect, validate, execute, demonstrates how mathematical rules become repeatable, emotion-free trading systems. By now, you've seen how expert advisors are constructed, from defining strategies to coding in MQL4 or MQL5, to building logic around indicators, and finally, to executing trades systematically. The combination of structured inputs, analysis logic, and execution functions creates systems that run with consistency, scalability, and discipline. But building an EA isn't just about writing code. It's about designing systems that can survive in real markets. That requires mastering 3 elements: the programming language itself, the architecture that keeps your code organized, and the indicators that shape your strategy. Each layer must be understood, tested, and fine-tuned. What makes or breaks an EA is the strength of the underlying idea. Even perfect code can't save a flawed strategy. That's why strategy design, risk management, and testing are inseparable from development. The real challenge is marrying technical precision with market insight. With these concepts in place, you're ready for the next stage: backtesting and optimization. In the next lesson, we'll explore how to test your EAs against historical data, refine parameters, and confirm whether your systems are robust before risking capital. This is where theory meets validation, and where trading systems prove if they're truly ready for live markets.